All right, let's go straight to Custom Street, right there at the NGX trading floor. We have our very own Anete on that side. Hello, Anete. And how's the energy right there at the NGX?
Yes, good afternoon, Ladi. Live from the NGX here. The energy, I would say, when you look at starting from yesterday, which was midweek of the second full trading week of January for the market, you saw that number coming all the way from the 103,000 points to 102, and then at intraday we saw the market, if we can have that on the screen, down by 1.20%. And that is also, you know, that energy, I don't know whether to say it's profit-taking or what factor, because so far from the start of the week down to Thursday, we still see that weakening of the market. So I would say that energy has weakened. And also, when you also take a look at the latest inflation reports.
All right, and I'm sure you have a lot packed for us right there.
I'll be up. Yeah, so we'll be giving you that details about that, and of course what to expect, because the market is really in a way that you really can't really explain. But let's talk about the numbers first. We see the NGX All Share Index last track 1 hour ago, 1.20%, 100,087.56. For the Johannesburg Stock Exchange, it was up by 0.2%. And climbed its way back into the 83,000 level, and still trying to make that comeback a little bit higher. For the other two markets, what I have here is that the EGX 30 was up by 0.89%, 29,650.42, while for the close of Wednesday's trading session, we saw the Nairobi Stock Exchange All Share Index about down by 0.20% at 129.47. So that's a snapshot for the markets at intraday and at close for the Nairobi Stock Exchange. But let's talk more about the market this time. And we have live from the studio, our studio here at the Nigerian Exchange Limited, Mr. Tajuddin Olainka, who is an investment banker as well as a stockbroker, to tell us more about the market. Thank you for joining us, Mr. Tajuddin Olainka.
Thank you, it's my pleasure.
Okay, so I want to ask my first question. You know, we saw that inflation number coming not too high, but still higher than what we saw in November at 34.84%. So now, how did the market react to this, which we've seen profit taking? We've seen the market decline for about 3 consecutive sessions and into intraday.
Okay, yes. Quite frankly, market anticipated, the just minor push up in the inflation number, and so market has not actually reacted to that number, because it has anticipated it. If it had gone down slightly, then we'll have seen a different market. But market is actually reacting to some of those things that are not actually totally in agreement with what market expect. For instance, that some of these public offers by some of these banks started way back in June. Let's look at Fidelity, for instance, which application list was opened in June. But up to now, that stock has not been, those shares have not been listed. So which means that even if they list them today, nobody is sure of what they can make out of it. So those delayed listing, arising from capital verification by central bank, actually, slow down the usual year-end rally that we should normally have in December. In fact, sometimes you could have it in November, but this time around we had it just close to end of December, and so that is the reason why you see that fatigue. The fatigue we see in the market is just because some of those shares that were offered to the public are yet to be listed, and investors are not having hold of those shares. They cannot trade them, they cannot do anything, and they cannot make money out of it. So that's also what is slowing down the kind of rally that we normally should see around this time. It's actually a delay rally.
Okay, so now, when you consider some, the economic news, and we're supposed to be in earnings week, and the U.S. earnings week is the earnings season has already started. So, what other factors could be driving the markets down. So the market is down by about 0.81% year to date. So what are the factors besides this, what you just mentioned to our investors?
Okay, quite frankly, you cannot take away, because we know the kind of result we are going to be getting in the next 1 month, especially February or maybe up to March for some of these companies. Those that will make those that we know that to be more profitable already showing that sign, and we saw that in their third quarter. We saw a company that made 1 trillion naira half year. GTCO, but yet its offer was undersubscribed. So you see, once market is not in alignment with some of those fundamentals around the economy, of course you see some reaction. But clearly, what is happening is that when you don't have offer, public offer going in the direction that it should go. Normally, when offer opens and the application list closes, as soon as let's say it close today. In the next 3 weeks or say the next 1 month, there should be allotment. So all these things are actually discouraging investors from pushing ahead, doing new things in the market. Some of these investors actually either they took loan or they sold they stole stock from other companies to be able to subscribe to those shares. So if they don't have those shares and they cannot trade them, of course they cannot make new money to be able to take position in other stocks. So clearly those are the things that are actually affecting the market. It's not a serious issue. I think CBN should not be up and doing this capital verification so that we can have offer. We can have the offer process concluded in just in a space of just about 2 months maximum. That's what the market expects, and that's why market is being punished at this time.
Okay, sir. So now that takes me to my final question with you. So we have just about approximately 2 weeks to the end of January. We've already spent 2 weeks halfway. So what are your expectations for the month of January, which is a month which you really can't, we have what we call the January effect. So are we likely to see that January effect on the market, or is that over?
It's still not over, but what I'll just say for that is that we'll see. I'm expecting that those companies that have completed their offer process, especially the SEC has approved their allotment and other things have taken place. So we expect them to get listed on the exchange. Once they are listed, we'll see activities there. But 2025 is going to be a different year for the market because a lot of things will happen. Government itself has said that it's going to be making use of private capital in funding some of those infrastructure projects. So for that reason, we are going to see more activities in the market going forward. So the investors will not wait for those activities to come up before they start investing. Those who want to take position ahead of what the impact of that on the market will start taking that in January. So we'll see still a bit of profit taking will still be there, but we'll see bargain hunting going ahead. But it's just a missed position at this time. But before end of January, I think we'll see a slight change in that. We see more improvement because of what government will be doing, in some months ahead.
I'm sure investors can't wait to see that materialize, because that's where they put their money in and expect better returns, which of course the stock market, Nigerian stock market, has been delivering, making it one of the best performers around the world. So thank you so much for your time on the show, Mr. Chajijin Olayinka, investment banker and stockbroker, giving us details about the market at intraday and what to expect for the remaining part of January.